At the time of me recording this episode, 99% of the people will tell you that the Dubai real estate market is a seller's market. Well, I agree with them. In this very special episode of the Dubai Real Estate Podcast, I sit down with Raj from my content team and discuss all things about being in a seller's market, what it means to be in a seller's market, how did we get here, and what it means for buyers, investors, and sellers. Also, if you're a first-time real estate investor, this episode is really important for you. But before we go ahead, if you're watching this on YouTube, please do hit the subscribe button, hit the notification bell, likes and comments are really welcome. If you're listening to this on Apple Podcasts, please do give us a 5-star rating and review. This really helps us getting discovered. And Spotify listeners, please do follow. So let's cue the music.
Okay, Tahir, we're talking about seller's market today. Are you ready?
Yes.
Okay, fantastic. Let's start at the beginning. What is a seller's market? How do we know that we're in one?
So look, Raj, what is a seller's market? A seller's market is a market where you have less number of sellers, more number of buyers, more demand, less supply, in simple terms. So that's a seller's market where sellers are in a position to negotiate better and the buyers are not in a better position to negotiate as much. How do we know we are in one? There are various factors. As I said, one is demand and supply. When you go out in the market, you find less number of properties, but more number of people wanting to buy those properties. Secondly, prices going up, every, few weeks or months, depending on the type of property. So prices going up, offers getting rejected very often. And not only that, at sometimes we're also seeing, bidding wars between 2 or 3 buyers wanting to buy the same property. There's one property on the market, 3 people wanting to buy. So many times we are also seeing properties selling above the asking price as well.
So when did we arrive in a seller's market? And what was the tipping point that got us here?
Look, if you ask about, the Dubai real estate market, currently we entered into a seller's market, you could say, post the lockdown was lifted. You could say from Q4 of 2020, we started seeing a rise in demand, and it went up. The demand picked up very fast. So yes, we're seeing. You could say about end of 2020, beginning of 2021.
We can take a guess, but how did we get here?
I mean, there are 2-3 things. Fundamentally, the markets were going down for past almost 6 years. Q3 2014, they've been declining till you could say Q1 of 2020. Or no, not Q1 of 2020. You could say Q1 of 2020. The markets were kind of Q1, Q2 they were declining. Obviously, COVID happened, and the world was under lockdown and all. But the moment things started getting back, people realized the need for larger homes. They also realized that during this lockdown, what they actually used the most was their homes. So the demand overall increased, and it's not just in Dubai, but globally. The demand for houses have gone up. Any major city you talk about, whether you talk about London, New York, LA, all these places, the demand for homes have gone up. And logically, if the markets were in decline for 6 years, there's no such thing as number of years, but it was a long period that the markets were in decline. The prices were literally very, very cheap, and even now it's still quite affordable as compared to a lot of other cities in the world.
You've spoken about this in other episodes of the Dubai Real Estate Podcast and Dubai Real Estate Masterclass on YouTube, that market forces don't always affect all categories of property equally.
Yes.
Which categories have we seen an increase in seller power? Is it all of them?
No, it's not all of them. It's not across, the entire market, that everything in the market is in very high demand. Luxury segment, yes, it's an extreme high demand. When I say luxury segment, we're talking about larger homes, villas, townhouses, penthouses, larger apartments, and not across all areas, but in prime and super prime locations. So, so one is any villa community or townhouse community. Yes, it's in high demand because of larger homes. Any high-end and prime areas such as the Palm Jumeirah, be it Blue Waters Island, be it Marina, JBR, downtown, larger homes in these areas, penthouses. Yes, they are in very high demand.
What does it mean for investors, whether they're choosing to move in or put them on rent?
Look, if someone wants to live in, depending on what they want to buy, they need to. There's still opportunity to be found in the market. It doesn't mean that if it's a seller's market, there's nothing good to buy. There's still, but you need to be more selective and more, particular about sorting out what you're buying, and you need to do your research well.
So now let's look at both sides of the coin in a seller's market, which is how does a seller sell in a seller's market and how does a buyer buy in a seller's market? Starting off with the sellers, I'm assuming their agenda is they want to get the maximum amount of money for their property. So what are the tips for a seller looking to sell in a seller's market?
Look, well, in general, yes, in a seller's market, the seller is at an advantage, and if someone wants to sell and cash the property, exit the investment, obviously, it's the best time for them. But again, what happens is in a seller's market, also a seller needs to be really, organized with the sale. 2-3 things they need to really make sure of, that they don't put the property in the market out to everyone. What happens is when the
To
property,
every agent.
like it should not be made available to every person in the market who's an agent, that everybody's selling your property. What happens is when 10 or 20 people are talking about the same property, usually it becomes like that this property is not getting sold.
So what's the safe number? The minimum will
Usually,
be one.
I would. There are two ways of approaching this. One is if the sellers have a trusted agent who they've been working with, they know them, and have a good relation. You appoint one person exclusively, but make sure that that person goes out in the market and approaches the other agents as well, because it's not necessary that one agent will be able to sell your property. So if the agent who's handling your sale has a good agent network in the market along with a good buyer's network also, that is a good scenario, because in that way a seller can actually make sure the price which is going out in the market, the negotiations happen in a nice manner and they get maximum benefit.
So to summarize that point, you will always have multiple agents marketing your property, but you're saying from an admin point of view and from a structure point of view, if you do have one central agent or primary agent, let them then be in charge of all the other agents marketing the property.
Yes, that is one way of doing it. The second way is don't go beyond more than 2 or 3 agents to deal with your property. That you give it out to 3 agents and let them handle the sale. But it doesn't really make sense that 10 agents have listed the same property, because what happens is when a buyer is searching and he says, oh listen, I'm seeing 10 advertisements for the same property, that means this property is not getting sold.
Makes a lot of sense.
So that is one thing which you really need to be careful about. Secondly, sellers really need to, what happens is in a seller's market, we've seen this very often, that sellers back out of deals. Okay, they put the property out in the market for an X amount of price, and they realize, oh, someone's willing to pay, so they get a little more greedy, saying, oh, if today someone, for example, is paying me 10 million, maybe I should increase the price to 11 million or maybe 12 million and I'll get an offer. So before you put that out, because you can be lucky with doing that once, but if you do that once, twice, thrice, the name in the market goes out that, listen, this seller is either just trying to test the waters, what he's getting, or he's not really serious about selling the property. Ideally, you make up your mind what price you want, and if you're getting that price, then you should be committed towards that sale. Because also, Raj, what happens is the agents working towards that property, if this happens once or twice and they realize that the seller is really backing out again and again, their interest also on working on your property goes down.
What happens then if you feel like the opposite of what you're saying? If you have a price and then you realize that demand is high and you want to increase it, maybe you can get away with it once or twice, but maybe what happens if you feel like you've maybe priced it 5% too high? Should you be patient or should you make a downward move?
Look, if you've priced it high, you can always reduce the price. Okay, if you feel that the property is sitting on the market, it's been a few months and you're not getting any potential interest on the property, and you want to reduce the price, you can do that. Okay. Also, it depends on what offers you're getting. Say, for example, you've listed the property at a certain price, but the offers which you're getting are 10-20% lower. That means probably the market is not really willing to accept the property at a certain price. So then in that case, yes, you can reduce the price. Now you would say same way the person can increase, but what happens is when you put a price tag on something, and when someone comes to you and says, okay, I'm willing to pay this, and then when you increase the price, that's really, that's something which not a lot of people like.
Okay, so now let's combine the two, pricing and marketing. You talked before about the correct marketing being critical, so not just doing property listings.
Yes.
Between you and your agent, what can be done to market the property to attract the attention of the right buyers?
Look, there are a lot of ways in today's day and age where you can, there a lot of innovative ways people are marketing properties today. Uh, Obviously, there are listing portals which are, the older ways of marketing a property. But apart that, social media today is playing a very important role. I'm also seeing a lot of influencer marketing getting into this space. So, and obviously, a private network of, ultra high net worth individuals is also something. If agent has the correct resources to reach, or a correct, database of buyers where they are dealing with, that is also something which you need to look into.
Okay, now one of the fundamentals of a seller's market is clearly there is increased demand. If a seller does find themselves in a fortunate position where there's lots of demand, how do they assess if the buyer is serious?
Look, two, three things. One, if it's a mortgage buyer, obviously you'll ask them that, do they have a pre-approval? If you're talking about a property which is really high in value, then obviously you can ask for proof of funds before you accept the offer or something, so that you know that the person is serious and is willing to put down a deposit. Usually also in Dubai, what happens is when you put in an offer, they ask for a check copy. So a lot of people, who are serious are very happy to put down a check also to show seriousness of the offer.
Mm-hmm. And then when everything's said and done, are timelines affected during a seller's market? Who sets them? How can they be influenced?
Look, timelines, in terms of, you need to keep some time if you want to actually take proper value while selling the property. If you are in a rush, it doesn't matter whether you're in a seller's market, buyer's market. If you're in a rush, obviously someone would want to take advantage. Okay. Because look, even in a seller's market, a buyer will want to negotiate. Okay? They are not just going to go by the price for you. They want to negotiate. They want to try their luck. Maybe, okay, you might not want to negotiate, but still from a buyer's perspective, everybody wants to try that. Okay, can I get it for a little cheaper or whatever? So you need to be a little patient, give it some time, and have a decent timeline in your hands to get the maximum value out of it.
Okay, let's look at the final part then of today's podcast, which is how a buyer buys when it's a seller's market. Now, the buyer is clearly on the back foot here. What are some of the high-level tips that you can give a buyer who wants to go out and make a purchase in a seller's market?
Look, now this is the main thing, Raj. Buying in a seller's market. This is something which you really need to be very careful about. I'm not saying you shouldn't be buying. You should be buying. You can buy, and you can find opportunities, but you should know how to. First and foremost, if you're looking at any ready property, my first advice to buyers is do your market research well. Okay, figure out what you want. Figure out what have been the last few transactions of the similar type of houses you like. This will give you an idea of what the prices are actually there. Secondly, if you get something, don't get too greedy and don't spend too much time on negotiation. If you like a property, if you've liked it, this is in your budget, this is the type of property you want, and this is what this is like, the ideal property for you. Don't go in for too much negotiations, because you need to understand that in a seller's market, and if that property is in demand, there are other buyers also behind it. So whoever acts quick and first will grab the opportunity. So this is where a lot of people make mistake, that they sit and they think, oh no, now I'll start with a negotiation. I'll give an offer which is 20% down. I'll wait. If not, I'll increase. Don't think that, you are the only buyer.
And typically when there's increased supply or increased demand on either side of the spectrum, that can also create scenarios where there's bad practice or corruption or things like that. Like, what are some of the things that you should be careful of if you're a buyer?
One is you have to be very careful about fake listings, right? The first thing what most people do when they're searching properties, they go on to any of the listing portals, they see the listings and they'll send, oh, you know what, you're quoting me for this property, maybe say, okay, 10 million, but I'm seeing the similar type of property listed at 9 million, 8.5. You need to see when was it listed. Is it really there? 99% of the times, in my experience, when you search on a listing portal, if you sort the prices by the lowest prices, the lowest prices which you see are 99% fake. They're fake listings. They are just advertisements put to be like a clickbait where a person clicks, so the person who's listed it knows the name and number of the person who's interested in buying, so they can offer other properties. Now, this is a very common practice which happens. Unfortunately, it's not the correct practice, but it happens. Okay, so this is something which you really need to be careful about. That don't go by, okay, whatever is the lowest listing, that is the price, because what happens is, as a seller, I'll go and see the most expensive listing. As a buyer, I'm going to go and see the most cheapest listing. The difference is a vast difference, and that's where people lose out on opportunities from both the sides. The seller is losing out the opportunity of selling the property at the correct price, and the buyer is losing out on the opportunity of getting the property at the right price, because they're thinking this should be the price. Instead, whichever agent you're dealing with, ask them to give you the transaction prices. Most of the agents, at least any reputed agent or agency in this market, will have access to official land department data where they can give you exact transaction prices in the last 6 months or the last few transactions which have happened recently. Take that. That is the best way to actually compare, okay, what is the price at which the deal is happening. I always tell my clients one thing, when you talk about the price, okay, of a property, the price of the property is not what the person is asking or demanding. The price of the property is the price at which it gets transacted. That's the real price. Don't go by the asking price or the offer price or what you want to put in an offer. That's not the price. The price at which it gets transacted is the real price.
Okay, now let's look at all of these 3 points again in terms of research and deciding what you want, figuring out the market value and acting quickly, and obviously fake listings.
Yeah.
Can we talk about all of those things again, but specifically with the lens of buying off plan?
Look, Raj, this is a very good question. When you are in a seller's market, naturally the developers are also going to get greedy. So developers also start increasing prices. The offers are not as great as what you would find something. Now, this is where you need to be really careful about, because what happens is you'll notice that every new launch getting sold out, a lot of people wanting to buy off plan. Here, people need to really make sure on one thing, that when you buy off plan, you're talking about an investment which is going to mature. When I say mature, means the property is going to get ready in a period of maybe 3 years, 4 years, whatever number of years, because it's being sold off plan. The developers just launched. You need to be very careful on what the price is. Payment plan, okay, yes, payment plan you need to put into, as a calculation, how are you going to pay? That's one thing. But more than the payment plan, the price and the square foot. Looking at the price per square foot you're buying is very important. Don't just buy. This is like I repeatedly keep telling people, just because a 1-bedroom is priced at 1 million, that does not mean that it's a great buy, in the same area. Because what majority of the times happens, a developer will show that, okay, a 1-bedroom is selling for 1.1 million, 1.2 million today. We've launched it at 1 million. Your property, when it's ready, will be 1.2. That is not the way you see. You see the square footage. The ready property is probably 800 or 1000 square foot. The off-plan property which is being launched is 500 square foot. It's literally, half of the area which you're buying. So when it's going to be ready, it is definitely not going to be that price, because the size is smaller. So this is where people really need to pay attention when they're buying off plan. I'm not saying this applies to every development, no, but whenever an off plan is getting launched, you need to be very selective on what off plan you're buying. Don't just go by the thing that today this property here is selling for an X amount of price, so if I buy off plan which is slightly cheaper or the same amount, I'm going to get more. Not necessary. You need to be very careful on what you're buying. See the area, see the layout, see the amenities, see what the developers built in the past, and also make this calculation that you're buying into an off plan. Make sure you don't buy just to buy now and flip. This is again, a lot of people make a mistake, because what happens is people think that we will put down a 10% down payment and it's going to get sold out. I'm going to flip this property. Two things. One, most developers have a resale condition. So read the resale condition very carefully. What I mean by resale condition is that if you bought as a first buyer, for you to resell the property, you must have you must make a certain amount of payment to the developer, which is usually 30 to 40%. Now, many cases the off-plan payment plans are such that you pay 40% during construction or 50%, right? So even if you've just paid 10% booking amount and you want to sell maybe after 3 months, you will have to complete 40% payment even though it is not due to the developer to make that resale. Now think of it from someone who's buying your property. Why will someone pay you a premium immediately if they have to put a 40% payment down, whereas the developer has only charged 10% from everyone? So there are these things which people don't realize. Also, you need to understand the moment you buy a property and you resell it, if you've paid the 4% DLD fees, right, for you to get a profit, if it, I mean, till the time the appreciation is not 5%, you've not recovered your cost.
Yeah, the first 4%
The
is not
first
even
4%
profit.
is the DLE. So these things are there. So people need to understand that when you make an investment in offline, and I personally also like buying offline. It's not that I don't like buying offline, but it needs to be very selective. Not everything. You need to do your research well, understand what it is, and then get into that. And always get into the offline thinking that you are not going to sell in between. You have to hold and wait till it's ready. And this is the key for any sort of investment in real estate, is patience. Invest, wait, and then you can get the profit out of it.
And if you don't like anxiety, then that 3 to 4 year gap is not for you,
It's
right?
not for you. Then it's not for you, because if you're gonna keep thinking, oh, my property is going up, down, this is not a stock where it's, every day is going up or down. You have to wait for it. You have to wait for a few years, 5 years, 6 years, till it's ready, the community is established, then you get actual value, right? And I mean, look, there's enough data to prove that historically also. Like, there are some great communities. If you see, for instance, I'm just giving you an example of Dubai Hills, and if I give you an example of, say, Maple, when they launched, they were selling it around 2.1, 2.2 million. Okay. Then the markets went down. Those same units were selling for maybe 1.7, 1.6, not 1.7, but the 1.7, 1.8 during the course of years when it was being built gradually, Once the handover happened, people started moving in, the community got established. Today, those prices are at 2.5, 2.6 million. Okay, for the same thing which was sold at 2.1, 2.2. Now, who made money in this? The person who bought, didn't sell even if the prices went down, completed the payment on time, and now if they see, they are at a win. And also people who bought when the prices went down to 1.8, or 1.7, whatever, they bought at that price because they were like, oh, it's coming at a good price, I should buy. So the game is about patience. You need to have, when you're investing in off plan, you need to have patience. And this is just one example. There are like multiple examples like that which I can give you, where people have they bought the right property, waited till it got ready, the community got established, and then they saw value in it.
Okay, well, if there was ever a reason to work with an experienced consultant, it's when there's extreme market conditions. So how can anybody watching on YouTube or listening to the podcast right now contact you?
They can reach out to me on any of my social media handles at Tahir Majithia, on TikTok, on Instagram, LinkedIn, anywhere. And they can also email me on tahir@trustedhomesdubai.com. I'm always happy to help.
Thanks so much, Tahir. Go ahead and read us out.
Thanks for watching this episode of the Dubai Real Estate Podcast. I hope you really liked it. If you're watching this on YouTube, please do subscribe, hit the notification bell, like, and leave your comments. If you're listening to this on Apple Podcasts, please do give us a 5-star rating and a review. This really helps us getting discovered. Spotify listeners, follow, and I hope to see you in Dubai very soon.